want to send out to the group. But the purpose of this really is like, what do you guys want to see, right? I can see like 3 of you guys are in here that are new. Scott's in here. Thanks for joining. Like, what do you guys want to see? I know I could go on and talk about like order flow and the ICT comparisons between order flow all day. I want to know what you guys want to see. I've been in a lot of rooms where the person running the room just talks and maybe it's not the best information, right? So you guys let me know what you want to see and we will go through whatever you guys want to go through. It's my
Hey,
job
Dave.
to get you guys up to speed here. Yeah. How's it going, Debo?
Yeah. Good. How are you?
Good.
All right. Well, if can we go about one thing? I mean, I know like ES and NQ today were kind of boring actions, so I was gonna check regarding the order flow for CL. Can you do that?
Ooh, okay. What do you
It might be
specifically want
difficult
to
for you.
see? Footprint?
Yes. So as I mentioned yesterday, the chart, like what the plan is, I want to see exactly. It was a good opportunity to enter that 15-minute fair value gap that I marked and see the order flow around that time. So I can give you the time if you want for it.
Yeah, okay, let me
Just set it up and let me know.
I'm going to attach this window here and then let's see if I can get this chart, file, find symbol. See if we can find CL here. I've never opened CL in this, so.
Yeah, there's so many things in Sierra, it's crazy.
I don't even know what exchange they have CL under here.
Dave, do you mind if I just ask you a couple questions here and there as we go?
Dude, fire away, man.
Okay, cool. So footprint charts, that's just a type of order flow, right?
Yeah, exactly.
Like what else encompasses order flow? The TPO?
Yep, TPO, depth of market. So like the DOM that you see back here, that's going to be order flow as well. Essentially anything where we can see transactions being had in the market or any sorts of profiles. That's a huge thing.
And all these order flow numbers are coming from CME strictly, right?
Yes. Yep.
Okay.
Oil expires monthly?
Yeah, the one I have, the ticker is V23. I don't know if it shows there.
Okay, let's see if we can load this up. If it will load.
If it's a big hassle, you can do it later whenever you can. Not a big issue if it's like a big thing to do.
Yeah, I don't
Because I know
know
you
if
watch only ES.
Yeah, you know what? Okay, let's do that later. Sorry that I can't get
Okay.
this right now,
No,
but
no problem.
we'll jump into it when I get it all figured out. I've literally never changed my charts in Sierra off of ES.
Okay. Yeah.
But you know what? It's funny because we've got a guy in the group, Lang, great trader, and he's been trading CL like often for a few months
Okay.
now, and he kind of swears by it, right? So I mean, I need to learn too. Like if there's something that I haven't explored and someone else has, like, dude, if you're not learning, you're losing, right?
True, yeah. Because honestly, like looking at the chart on it, it had a really clean setup. But like, I don't like trading it out of the hours, like where it doesn't have the best volume. So
Sure.
because like when I saw that setup, it was like afternoon to like evening. So I would not like to put a trade and go to sleep having trade on.
Sure.
Yeah.
I should look into CL. You know, like Lang sent me some like really clean moves on this thing. It's definitely something I should look into.
But we can check ES and just order flow and go over these for now.
So what's the best way for you guys to understand this order flow, do you think? Like, do you want to go through, what if we go through our like ICT type setups for the day and then we'll go to the order flow charts and see what we see if there's any correspondence? Does that help?
Yeah.
Okay.
Yeah, that sounds awesome.
Cool. Okay, so let's just go like ES big picture, right? And I've also reinstalled TradingView here if you guys haven't noticed, and I'm going to start using this because I know a lot of people are using TradingView. So I think it's just heavily relatable, and I think it's just going to be easier going forward to use TradingView. Their drawing tools are much more user-friendly as well. Okay, so
what indicators do you have loaded on that thing?
I have 2150 VWAP, and I have this guy that I was trying out just to show me like the 11 o'clock silver or 10 to 11 silver bullet zone. Outside of that, nothing else.
So just VWAP and EMAs.
Yep, exactly. 2150 VWAP. Yep. I like to look at them, like for example, not to get off track here, but if I pop on the 2150 and we look at today's price action right here, this is a big retail setup here. So we've got 21 is the pink, 50 is the blue, price is staying under 2150, staying under 2150. As soon as price reclaims these areas, pulls back, this is a big buy for retail, right? And it's a tough buy, but a lot of good retail buys this type of thing. Buy the 21 hold, and then we drive up, and I'm gonna bet like VWAP is somewhere here as well. If I put this in here, VWAP, yeah, there it is. So this is a big thing that retail traders like to buy, and it's not a bad trade. It's like a VWAP test, and then you get this like 21 here just holding price up, and if we can get an explosion out of this, that's typically generation for the upside. So I like to keep those guys on my chart when I can, just to have a look for those things, even if I don't trade them.
Do you get a large amount of volume off of that?
Yeah, you do. You do usually get a nice volume injection off of that, because if people are trading like VWAP, especially, so VWAP is trading here, price finally breaks below VWAP, a lot of traders are just trying to short all of this into VWAP for a price move lower. And as soon as we don't get that price move lower, like they try and short, we hold the 21, we start squeezing, they all start stopping out. And like increased volume this way isn't large, but you get rather significant moves out of this, if that makes sense. So it's just nice to look at, right? And where it's nice as well is, okay, in this situation, let's say we're just looking at like basic ICT models, and this model I don't really like, or this trade I don't really like. I know a lot of people took this fair value gap here. Oh, I put them down here. So I know a lot of people took like this fair value gap area, or even the second one up right here, kind of push. We're displacing to the upside. We don't have a great market structure shift over the highs, but they bought this little pullback. Now, if you see this and you have this type of 21 VWAP convergence, you know, maybe it gives you a bullet to make your trade a little bit more valid here. The reason I don't like this trade really is we didn't have any major sweeps, right? Like if we're looking for big like sell side sweeps, we just really didn't have any to say, yeah, like we've swept sell side, let's get long. That's why it was so difficult to trade today, even when I looked back at it. Now, if we had a trade, or if we had a situation where we could have dropped this low, this is a different story, right? We drop the low, we push back up, we displace, we hold, get a market structure shift, and then we can go. That's better. This day is so difficult to trade. I'm going to say, even in some of the other groups you guys are in, likely no group's got anything in here that we're trading well, at least. It's just too difficult. But this is my bigger picture here, okay? So what I like bigger picture, we'll start with that just to keep things easy. Bigger picture, I've been saying for a while, bullish, 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 bullish. I just like the bullish sentiment here on this bigger picture type play. If I just take a fib here and I go like this is our 50% area, right? So this is a big sweep, higher time frame sweep. We sweep, we drive up, we pull back, we hold exactly where we swept previously. We continue to drive, and we make new highs. Now, what we did, interestingly enough, here is if I drop a line, here it is. If I drop a line up there, we've also swept the top side of this range as well. Where do we get a pullback into? The 50% area, which is very great. This is market healthy pullbacks, right? We drive up from a low, we get a nice 50% pullback. We hold 1, 2, 3, 4 days. Fantastic. The price is going to go up, right? A lot of people had a big bearish sentiment on the market when they saw this print close, this print right here, this black print. They were thinking that this day was engulfing the action of this day. This is not bearish, okay? Everything before this is indicating bullish sentiment. Now, am I sitting here saying that like we're so strong that we're going to reach this 46.8350 high? No. I'm just saying that off this 50% area, we're going to be in a strong market, right? We're going to be in a strong market. Now, if we look at this area, this is 4,500. We're currently trading 60 points above that or 62 points above that. There were a few days back last week that we had some really good trades. 1, 2, 3 days. These were good trading days for me. This week, kind of a wash, right? Today was a terrible trading day. It is what it is. Now, this is where I find the difficulty in stuff like this and where we actually have to combine our order flow with these types of charts and our ICT methods. We can see that price drove up here. We had a daily fair value gap sitting right here. We also had a volume imbalance sitting in here. We just bulldozed through both of them, okay? And where did we stop? Nowhere according to any charting or ICT trading methodology, right? We stopped in the middle of nowhere. We in fact did stop in the middle of somewhere. If we look at our footprint charts or our TPO charts here, we can see that this area is a naked point of control back from this day. This is a day where we started rolling over back to the 50% area. These were the 3 days that we wicked under that 50% area. We retested it and we started driving back up. We've got a naked point of control here. And where does price come back to? Like right to this naked point of control, right? And this is where we want to test. Another interesting thing about this area right now is, what do we have at the high? Can anyone tell me what we have at the high here?
Low prints, I'm assuming, or
Poor
low
high, right?
poor highs. Yeah.
Poor highs, okay. Now, what makes a poor high here? A poor high on any TPO chart is anything less than 2, or if we have 2 single prints at the top of this TPO chart, it is not considered a poor high. So for example, if L period was like this and L period was like this, that means we have 2 L period prints above the high. This is a high that has excess in it now, right? Excess means a completed auction for the time being. So we're no longer concerned about that being a poor high. Because we have an L and an O period here, this equals a poor high. If each one of these, let me break this up here. So if I just go like this and I split this profile, I talked about this in our most recent YouTube video, but we'll do it again here for sure. If I split this profile up, right, we need to look at this profile in 2 separate manners. That's not a rectangle tool. This one is. Okay. This right here is the profile for the day. This is the profile all squished in on each other, right? This is the profile for the day in 30-minute intervals. The TPO chart runs on 30-minute periods. So this A period is a 30-minute period, B period 30 minutes. So A period is what? If A period is a 30-minute period, it's 9:30 to 10 o'clock. B period is 10 o'clock to 10:30, 10:30 to 11 o'clock, so on and so forth. If we look at the period split like this, we can see the very obvious poor highs. Now, I was speaking with possibly one of you guys earlier today in the room, and we saw in the TPO we had G period and I period making equal highs. What is this intraday? It's a poor high, right? So when the market starts rolling over here, what do we do? Because we have the TPO chart, we know this is a poor high. What do? We do not short the market. Why? Because the likelihood of the market pulling back to find value, buyers, and driving up through this poor high to complete an auction is highly likely. Okay? Highly likely. Let's drop this down here and we'll go into a 30-minute chart. And we will look at this right here. So these are the periods that we were looking at right here, the 30-minute periods. See how it's much more difficult to see on a candlestick chart that this is a poor high, right? This is definitely a poor high. Now, price pulls back and a lot of people are wanting to short this. We know better. We know that this is a poor high, and the likelihood that the market is going to turn around and try and complete an auction above the poor high is very high. So if we jump down to a 1 minute chart, and excuse me if I'm fumbling around with TradingView a little bit. I haven't used it in a few months here. So here we go. We've got the 1 minute chart. Now the poor high looks a little bit more obvious on the 1 minute chart. Right here, right? High, high. We've got a poor high. Now, what are we looking for in this case? Well, let's say we call this like a draw, this daily fair value gap. Okay, this is an area where we've taken a liquidity draw. The market starts rolling over. We're still looking for market structure shift and displacement to the downside. In my opinion, this is a market structure shift. It is not displacement, right? Market is not aggressively displaced lower. So even by looking at these prints right here, and be honest with me, guys, is there anyone, if there was a PD array up in this area, is there anyone that would have shorted this because we got a market structure shift inside of a daily fair value gap? Is this something that you guys would be trading?
Definitely not for me, especially with the equal highs on top.
Well,
Like, just
I
look at the
think
candlesticks.
if NQ would have swept, then I would have considered it. But if it was equal highs on NQ and ES, then no.
Okay, good. So this is it. This is another area where we're combining these concepts with order flow, right? We can see them both. And there's times where you can see these equal or relatively equal highs better on order flow than you can on a chart. You're going to have some days where the market opens and there's been chop here. The market opens, it will give us a high on the intraday profile. We go down, we pull back up to open price, and we go down again. The TPO says this is a poor high. On the charts, it's going to be very hard to realize that from the open price to high of day is a poor high, which it is, right? Or is a draw, let's say it in the ICT terms. So that's why I like to use both of them. Now, back to the beginning of the trading day. So for me, the beginning of the trading day was a mess. I even looked around after the fact, because I didn't trade today, at what we could have possibly traded. The only thing that I saw here was, if I leave that white line there, we go back here. This is the only thing that I saw here. So that high that I marked out, this could have possibly been a draw, which I really don't like, but it could have possibly been a draw. Market turns around, and you could have shorted this right in this area, right? So let's zoom out. If I can get that draw in here on the 1 minute chart, right? Above a high, we go for a draw. We can't hold structure over the high. This is about the only area that made any sense for me to do anything. And it was a good trade based on the ICT methods, right? If you're looking to take your profit right at this pivot low, and you're very stubborn with your orders, you got shafted. But it is what it is. For the most part, the trade worked out and it was decent. So what we can do here is, let me try and pull up an order flow chart. I haven't looked at this actually, so it's going to be interesting to do it together. Okay, so it's going to be like 9. Sorry, go ahead.
I just have a question real quick on this footprint chart. As far as the numbers and the size of the bar, they don't seem to be like correlated. Like if the numbers, 1500, the bar could be, super large in red, and if it's 200, it could be super large in red. Why is that?
It's going to be relative, right? So it will be relative to the other prints on this bar.
And it's just relative to that one bar, correct?
Yep.
Okay, awesome. Thank you.
Yeah, no problem. So if we go back and we look, and we'll just, we'll pop this guy open. And we've got this like little drive before the open, right? Let's call this like our draw on liquidity or our sweep. Let's maybe go to a 30-minute chart. Can we all agree that on a short-term time frame or an intermediate-term time frame, this could be a potential draw right here. Draw, possibly roll the market. Are we in agreement here?
Yeah.
Mhm.
Okay, right? This is how I feel as well. This could be a draw, roll the market, and I'm not likely not looking for these lows, but you know, we could target some of these pivot lows with a good sense of realism here. So if we go into our footprint charts now, this is the drive that we got in the pre-market. We start rolling over just like we did going into the open, and then the open hits right on this print. Okay, so what are we looking for in this case? And this is how my brain is programmed to combine these two systems. Okay, what have I identified first? Well, I've simply identified that, like we said, we have a draw. We have a draw. And after the draw, we have a potential fair value gap, right? Simple enough. Like this, we got a potential fair value gap after a draw. Now, once we set this fair value gap in, instantly, I look at what the price values are at the low and the high. So I know this is 43.75 by 45. I go into my footprint chart, and if you want to do this and make it easier, you can drop one of these guys on here, 43.75 by 45, we said, right? Right here. So that's our fair value gap. We're just representing it on the footprint chart right now. Okay, so we get a move to the downside before the open. This is open price. If this is the open here and you see this fair value gap, where do you want to sell if you're willing to take the trade? For me,
The big order.
here.
Yeah, that one.
And here. These are my two sells, okay, on this trade. Now, this sell is in front of the fair value gap. It is 2 ticks in front of the fair value gap. We're going to run into situations where this seller is 2 or 3 ticks above the fair value gap. So if this guy wasn't here and he was here, I would be selling here and here, right? Why would I be selling here? It's outside the fair value gap, Dave. ICT says the wicks do the damage. Okay, from my research here, most of the time, the wicks aren't doing damage. They're going to get sitting orders from aggressive buyers or sellers depending on which way you're trying to push the market. So if the wicks are actually doing damage outside of this range, I can almost make a bet there's a reason why they're reaching up there. And it's usually an order, a stack of orders is why they want to reach up there. Okay. So this is a very simple trade, like right off the bat, right off the open, that we can combine these order flow and ICT concepts. So now instead of selling the front of this fair value gap, which I mean in this case is probably fine. The fair value gap is very small. We don't have much risk. If you risk the high or above the fair value gap candle or above candle 1, it doesn't really matter, right? But this is going to give us far more accuracy. In this case, we have a worse entry trading with order flow. And this is where we have to be transparent about this too, right? Because I would have been in here and tried to get in here, I wouldn't have got a fill. If we went up one more tick and we got this fill, all of a sudden our average is here and we have a better average, right? It's gonna work. It's gonna work for us most of the time, and not so much for us some of the time, right? So if we all understand that, we can move forward. That makes sense. Helpful.
Yeah.
Yeah.
Okay.
Could I ask a question?
Absolutely.
So interpreting the footprints, because I love this for the entries, and you're taking a concept of entering into making a trade off of a fair value gap and looking for the best possible entry. Now, is there a way to break down like what you're looking at as far as, because I think of buyers and sellers, and then I understand the difference between a passive and an active. But when you look at these numbers, how do you interpret and identify like, okay, so there was a big buyer coming in and versus, possibly closing out other orders? How do you identify where that you're in line with a large scale buyer that is going to hold the market there
I get
with
it.
these charts?
I don't. We don't know, right? It's very difficult to know if we're getting like someone sitting down here on a bid. Like, what are they doing? Are they liquidating? Are they accumulating? Like, what are they doing? Right? It's hard to know. Where we can figure this out is as a day or a session progresses. If let's just say, okay, here's an example. I'm just going to give an example. I'm going to make a few things up here. So within this range right here, we see an order. Let's say this is red, this 610. That's a passive bid, as well as aggressive sellers hitting this for what we're pretending to be a negative 600 delta. Okay, and then the range continues, and then we have another one, negative 750. Then we have another one, negative 850. Well, if we can go back and we can realize that the high is only a few points away and we didn't see anyone building a position into that high, we can maybe assume that they're trying to accumulate a position here for a move to the upside, right? Regardless, if they're buying or selling to build a position to the upside or liquidate a position, they're still having the same impact on the market. The market doesn't know that they're buying for price to go up or buying to cover a position. And frankly, it's difficult for us to know as well because we can't go back days, weeks, or months and see when this person entered the market if it's in fact a large person that's hitting the market, right? One thing that helps us identify what they're trying to do is we can start looking at TPOs. Now, before I get like really deep into this, I want to spend more time on some of the other concepts, but we can start looking at our TPOs and we can start realizing a few things. Like this, I'll change the color here. Like this right here, this day is a normal day, okay? It's a normal day with a poor low. And I'm still remembering this poor low. I have it marked on my chart. Price has not come back here. It's likely at some point to come back here and just fill this up. But this is a normal day. We have a very nice B-shaped profile. The day is normal. This is closing price. And this is balance, right? So the market is closed within balance. To me, that means there's no players offside. The market is not too long. The market is not too short. We're in balance, okay? Same with this day. We're closing in balance. We're closing in a balance. This day right here, you notice how balance is up here? Where does the market close? Outside of balance to the downside. To me, this is telling me the market is getting a little bit too short. What happens when the market gets too short? If they're too short and the market's not going down, those shorts need to start covering. So we close the day a little bit too short. We open the next day and shorts continue to apply pressure or try to apply pressure until they realize we're in big trouble. And what happens when the market's too short? The shorts start to cover and rally the market, right? So this is another big concept that we're going to talk about is going into the day, is the market too long or is the market too short? I think this is roll day here. You should have an overnight inventory correction if the market is too long or too short. Very nice B-shaped or a bell-shaped bell curve profile here. This is a normal day. This is value. Where did the market close? A little bit too short, right? Just a little bit too short. What did the market want to do? It just wants to correct inventory and exhaust those shorts. Now, this doesn't happen all the time where the market closes outside of balance and we come back into and through balance. No. But this gives us a good idea of where and how the market's positioned. We close right at the top of the day, right? Right at the high of the day. We're still inside of the balance range, but really balance is here. And what does the market do at the open? Slight inventory correction, and then we push to the upside. So this is not as extreme. Without rambling on and on, this is a way that we can kind of identify where the market or where the market participants, algos, HFTs, whatever you want to call them, are positioning themselves and if they're what the inventory looks like going into the day, right? I'm not even going to ask if that made sense, because at this point I hope it doesn't. But that's how we can look to see where some of these players are situated, right? We can get a nice bias off our TPO charts based on levels that we possibly want to come back and test or visit. You know, we've got a poor high here. Expectation is either in this overnight session or hopefully tomorrow, we could possibly at least peek through that thing. If not, drive straight through it. The market wants to complete an auction up here. It needs to find the last buyer, or that's its job. It wants to find the last buyer before the market turns around for a complete rollover, or just a pullback back into some balanced areas before we imbalance again. Clear as mud?
Dave, what's the benefit on the TPO chart? You know how you had the letters broken up like chronologically? I guess what's the benefit of that? It just shows like the trend on the day, because those are basically just turns it into like 30-minute candles, right?
Yep. So by using them broken up like this, you could definitely reference 30-minute candles. Where you're going to get a little bit confused is you're going to start paying a lot of attention to these, like, oh, it's a 30-minute hammer, it's a 30-minute engulfing, whatever it is, where that doesn't matter as much to me as the profile. I just want to see what that 30-minute profile is doing or has done for its period. So, for example, on a day like today, or on an extreme trend day, you typically get prints as soon as the trend starts. It's called one time framing higher. They can't make new lows, new lows, new lows, and you can see this on a 30-minute chart again. The idea of a trend type day is if we're trending on the day, we one time frame higher, which means no new lows on a 30-minute chart of the TPO outside of one new low. It can make one new low on the day, and we're still considered a trend day. So if we look at this, where we started the trend, no new lows, one new low, no new low, no new low, no new low, and this is kind of where the trend ended, and we just chilled out at the upper portion of this range. If you want to start looking at your 30-minute charts, it's a very good reference to what the TPOs are going to tell you as well. It's a very good start, for sure. You're not going to get a lot of these time profiles, because this is how much time we spent in a given area, how many periods we have overlapping on each other. So for example, if I zoom in here, I've got a number here on the left side, and this tells me, this 9 tells me there's 9 periods here. Okay, this is an area of heavy activity. On a 30-minute chart, if you're just seeing candles up and down, it's going to be hard to see this, right? It's going to be hard to see where we're actually forming a time type value area. So that's just why I prefer the TPOs over the 30-minute candlesticks. And I do like to have this open every day just so I can see how the day's working itself out. And specifically, reactions at highs and lows of these periods, which would be 30-minute candles.
Gotcha.
Yep, go ahead, sorry.
And then for the POC, I'm sorry, were you done, or I didn't mean to cut you off?
No, go ahead. Yeah, it's all you.
For the POC on this chart, you said there's the time-based one is the orange, right? And then the volume-based is the yellow.
Uh-huh.
I guess which one holds more weight in your eyes, or like say price is kind of split right in the middle between the time POC and the volume POC. I guess which one has a stronger draw or pull?
Both.
Both.
Okay. It's hard for me to say, like, it's hard for me to say which one. But what we can do, what you can, how do I put this in an easy way? The way you can look at it as the yellow one is volume, right? So if we have a large volume injection that's below the time point of control where we spent the most price, in this case, what I would be thinking in this area is, especially with this big negative delta print here, which is what this red represents, this is an area where a lot of shorts really got jammed up, right? So because this is volume point of control in the day, it's a large negative delta on the red side, and this is a possible area, even if we just look at these prints, that the market could have started rolling. I think a lot of shorts got really jammed up in here, and they got stuck short and too short, and that really helped the market drive to the upside. And now we've spent the most time up here, and shorts are in big trouble. So all of this stuff put together, it wouldn't surprise me if we have these poor highs, shorts are stuck, and we have to relieve some more of this market short pressure to drive a little bit higher. This is how I use the 2 point of controls, right? A lot of the times they're stacked on top of each other or close enough to each other like this, where we can use them together, right? This area becomes a balanced draw, right? If we're trying to short tomorrow, like let's say tomorrow, a good trade might be, if in the on session, which is the overnight session, we do not break today's high, today's RTH high. If we chop around here, a good short trade for me would be an up, break today's RTH high, which is a weak high or a poor high, and then we roll, the market displaces, we get our short, and we can look to target the stuck shorts that were here and even down into this area. That's how I would use these points of control on these profiles.
Awesome. Thank you so much. That's making sense. Would you say the weak highs and weak lows is typically just like a pivot point, like basically a liquidity sweep on the TPO chart?
Yep.
Okay.
It's an area that the market doesn't like to make mistakes, right? The market likes to ebb and flow very cleanly and inconspicuously. So it likes to complete business in an area, move up to another area, complete business, move down, complete business. It likes to just ebb and flow very smoothly. Now, if it leaves areas that are market anomalies, is what I call them, it's going to want to go back there. Like back to the ICT example of, he said on one of his webinars or his sessions, if you're painting a wall, as the brush runs out of paint, you start having these splotchy areas, right? You have to dunk your brush and go back over that area and repaint it. This is the same as the market, right? So if the market leaves some sort of anomaly behind, like a poor high, a poor low, single prints, which we'll get into, low volume nodes, which we'll get into, the market wants to go back and fill those guys in. It's an anomaly and something that the market needs to and wants to correct, right? This is a slightly different TPO than we've been looking at. The first TPO that we looked at, this guy, every single letter you see here was one tick. So if I put my cursor over this N, if we look on the right, this N right here is 4553.50. I go to the next one, 0.75. Next, right? It's all one tick. I've arranged another profile that gives me a little bit of a broader picture where every print or period print, like this A print, is 1 point, right? So it condenses everything on the TPO a little bit more just to give me a different look or a different idea. Now where I use this is when I just want to like zoom out and just like say what's going on, like where are we getting like all these super big overlapping value areas. Like this is going to be a problem for the market to get through. This was a previous balanced area. Now if we took all of these profiles right here and we join them all together, it would make a large bulky issue for the market. I think I can actually do this. Merge with prior profile. Did that work? Merge with prior. Merge with prior. Merge with prior. Here we go. You see how ignorant this looks for the market to get through now? And look where we're trading up into, right? So now from everything we've talked about, let's go back to this TPO chart. What did we say here? We have a poor high. The market is stuck short. We're looking to move through this high potentially. But what do we have on the downside? We also have areas of balance on the downside that the market might want to go after. So let's just say the market doesn't go through the on-session high tonight, or it doesn't go through the RTH high tonight. It does this. And tomorrow morning we rip up to like 45.67. You see these 2 points of control, both volume and time? Where are we sitting at? Like 67? Would it surprise me if tomorrow we did that? We ripped up to the 67, got rejected, and then started rolling a little bit? It would not surprise me at all. Because we've got a huge balanced area up here. That's going to be essentially a draw, and the market's going to trade to this, hold this, and move out of it, or to this, hold this, and pull back out of it, right? So this is something going into tomorrow and possibly even next week that just keep an eye on this. Like drop that 67 area over under on your chart and just see what happens, right? Undo all merges. There we go. And this is something that you'll start picking up like visually. As soon as I came to this chart, I could just see all of these profiles that were very close, right? All of these like value areas that were very, very close. It's kind of like this as well. If you took these three and you stacked them all together, as soon as we got out of it, what do? We came right back into it, held, and then what do? We moved away from it. We can actually do the exercise again. Merge with prior. Merge with prior. Okay? So we merged those 3 days. Where's our value area? Right here. What does the market do? It pushes out a value. What is the market's job? It's to move from one value area to the next value area, finding liquidity on the way and creating market imbalances. It moves away from value. What does it do? Let me get a little bit closer here so we can actually appreciate this. We move outside of value. What do? We pull back in, right back into where? Value, right? Where we spent the most time previously. That's where we pull back to. And this is also arguably volume value area as well. I know the yellow is here, but let's use our heads and say that these are very much the same, right? And we pull back right into this area, and then the market shifts away. It all makes sense. It's what it's supposed to do. We just have to recognize that it's wanting to do this. And that's what takes time, right? Sense is made?
Do you have a way of wrapping your head around of the whys it does that? Is it because the basically the buyers and sellers are comfortable at that spot and that's why it returns to it? I'm just wondering, I try to get behind the whys to understand the overall concept.
Yeah, like leftover orders there, leftover liquidity. A lot of good traders, for example, even big money traders, when we had these three profiles stacked together, 1, 2, 3, we stacked all of these together. We'll actually do it again just for the sake of this. We'll merge this profile here and we'll merge this guy here. So we have all these guys stacked together. This is value. What do we do when we're trading inside of value? We don't trade, right? We drink coffee, pick your nose, do whatever you got to do. Literally don't trade because it's so difficult to trade within value. Everyone's in agreement on price, so it's just going to... The trade that we can take, though, is we've spent so much time in this value that once we drive out of it, the idea for all the people that were waiting through this value, the idea now is the market is strong. What is price going to do? It's going to come back to the area that people were waiting at previously just to pick up unfilled orders, right? Okay, I'm telling you I'm going now. Last stop, off to Chicago. And you'll see this intraday a lot, not even on just like a large profile like this. Like you can even see a lot of situations intraday like this. We drive up, we actually create this point of control as we're chopping around here because we're spending more time in this area, right? We're creating this point of control. Creating it, what do? We drive away from it. Perfect. What do? We come back. Last stop, we're going to Chicago. and we go up. This is the market's job, right? Where traders get caught is they trade this before the market tells you or tells them where it wants to go. They're trying to get long, short, all this crazy nonsense in this area, and they're just going to get banged up. Because inside this area, the chocolate bar is worth $1. They're trying to buy it for 50 cents and sell it for $2 in this area. It doesn't work. It's not going to work. It's worth $1, right? It's worth $1 until told otherwise. Now we're told it's worth more. When it comes back, we know the charts told us, half an hour ago it was worth $2, and it's coming back down. And if the people on the street saw the chocolate bar yesterday was worth $2, and the next day it's worth $1, what are they going to do? Buy all the chocolate bars the next day and sell them the day after for $2. Because they knew the previous day it was worth $2. And they're getting a deal. They can make 200%. So they're going to buy all the chocolate bars here for $1. Silly analogy, or kind of helped?
Yeah, that
Oh,
helps.
awesome.
Okay, cool. Don't get chopped up in the range. Like when we're trading at the point of control, just don't get chopped up in it. And you'll see this like on your charts. You'll see it everywhere. Just it will yank you around. I know the hard way. I've tried to trade these point of controls. This is the orange area on my DOM right here. Whenever the price is hovering around this orange area, it's going to be relative to the day, but I would say like 3 points above, 3 points below, I want nothing to do with this thing. I don't care. I don't care if like there's an amazing setup in here. I don't want it. Let's say we just draw 57 here and we go like 3 or 4 points above here and we go down 3 or 4 points here. Okay, there's my range. And it will show you the range. The chart's going to print a range that built a point of control here. This is the range. Get out of the range. Essentially, market structure shift, displace out of the range, okay, fair game. Now I can look to sell you or any order flow here that showed weakness. Sell, market moves down. But you got to wait for this initial move. The best entry is going to be if we're in that was terrible there. If we're trading within that point of control range, this is the point of control, the best entry is going to be sell, hope we do this. There's a lot of hope involved though, okay? You'll see with these ranges that get built around point of controls, they're very cheeky. We come in here, we get into a range, we break the high, we break the low, we come back to the high, we shift lower. This is the chart. How hard is this to trade? It's so difficult, right? I'm long. We get through the high. This is only 3 points away. We don't take a partial. Comes all the way back. I'm scared. I stop out break even. It breaks the low. Like, pull back, short it. No, back to the high. Stop it. You can't trade this. It's so hard. The only people that can trade this are like scalpers, serious scalpers. Just doing this in the range, right? Other than that, I just wouldn't touch it, man. It's not worth it.
So you're looking for an event, either a weak high to be swept and then displaced back into to return to the volume of control. You're always looking for an event on either side of the area of point of controls to basically play back into. Is that a
100%.
fair assessment of at least part of the trades?
The best trades that I ever take are back into the point of control. Okay.
Yes, that's what I'm getting to. Sorry, go ahead.
Yeah. There's a lot of traders that are very good at trading these trend type days, right? Very good at trading these trend days. The only trade that I saw that I might have taken was this right here. And I wasn't here. I did not trade today. This guy right here. I would have looked for a trade here after this. Why? We knew there was a draw here, right? All of these people trying to get short, which we established before, none of us would have shorted this. All of these people trying to get short, there's not a large displacement in the market to push the market down to say, yeah, shorts are taking control of this. Once they get below this pivot low, this thing just should start bleeding like crazy. If it didn't bleed here, it should start bleeding here. Once it doesn't and we start driving to the upside, this is like fair game to look for a long to get through these highs. Where would I target? the point of control that I have marked out here. And I have that point of control marked out here from these guys. Right here. That would have been my target on that trade. But overall for me, and this is something that I'm actually working on for myself, is how do I trade this properly, right? A lot of people can buy this. I have a hard time buying this. I want my stop at the low. I don't want to buy this, looking for this to risk this. A lot of people can. Even this. A lot of people can buy this, risk this, and look for whatever, maybe this, right? I have difficulty doing this. So I've been actually like looking through some footprints even to figure out the best way to do this. And I've kind of figured out a way. I don't know entry, stops, and targets yet, but when we get a drive of buyers off a low, we get a drive of buyers, prints start moving higher, this print closes here and we open here, just buy this and then go for the drive. We close here, we open here, buy this, go for the drive. We close here, open here, buy this, go for the drive, right? And this is by no means, I'm not telling you guys to trade this because this is what I'm testing. I'm trying to build a model on this where I can actually participate properly in these trend days. And if each one of these trades is on a 2-point stop and I can take even 5-6 points out of the trade and on a trend day do it 4 times because the market's just going up, we have a 20-point day doing nothing, right? This is my weak suit of trading, is when the day goes straight up. There are people that are very good at this. If we get a 10-point move and a 3-point pullback, there is no shot I can buy this. And this is just me. I just can't do it. There are traders that do it, and they're looking for prices to and through highs, and they do very well. So I need to figure out for myself, how can I participate in this? Same with the downside. If we're moving down, big block, sell this. Wouldn't have gotten filled. We push down, we open here. Sell this, sell this. We get filled. Push down, close here, open here, sell this. Push down, sell this, right? Until the point where we've pushed down on this print, and this print is like opened up here, right? Then it's like, okay, we don't sell things anymore. We're not doing this like very clean stair stepping down. We're getting pretty janky now. We go back to this area. We drive up. Buy this. We drive up, buy this. We drive up, buy this. I would buy this on the next print. I wouldn't buy this on this print. We drive up, we open here, and just tank. Maybe we would have bought one of these. Trade's over now. We're done. We got 1, 2, maybe 3 good trades. Trade's over. This is how I'm looking at participating in these days.
That's awesome. Can I ask is there a series of patterns on these footprints that show you whether it's going to reverse or continue? Because I believe if you get an extreme amount of delta on the tail end of a move, say at the bottom of that, that low, you have a bunch of red deltas, which basically means there's a whole bunch of high pressure selling, but it's not going anywhere.
Yep.
Is that a generic like 101 way of possibly knowing that it could possibly reverse?
Exactly. Nailed it, man. Nailed it. This delta right here. So this is, sorry, go ahead.
Also, I don't know how to necessarily incorporate this bottom, which is basically a collection of the whole bar. I take it, the Rengo bar. But I'm not sure how to interpret that with what I'm seeing. Because I'm looking, my eyes drawn mostly to the delta. And I'm assuming that you have the passive, which are hitting limit, some big buyer or seller that in this case is dropping down. You have a big limit orders that are just basically getting filled, and all these people that are hitting the sell button are just increasing the delta because of their aggressive is showing up as a delta. That means it's not, if the candle's not going anywhere with that much big bars, that means it's possibly that there's a reversal. There's a big enough buyer to possibly cushion for a while.
Yeah,
but I'm
we've
not
got to
sure
be
how to
careful with
interpret that in the bottom.
we've got to be careful with the big buyers, right? Because for the past few days, this week being roll week, I haven't seen very many large buyers. Last week I saw a lot of them because those people who are holding contracts for the full 3 months of the contract period, they're trying to liquidate a week or two before the contract rolls. There's typically going to be no big order injections into the market on this week. It usually comes the second week before roll, so last week. But let's just say this negative 7751 was like 5,000 contracts, okay? We never, ever buy this guy. Never, okay? What's going to happen is the price is going to come down here. It's going to hit a wall. And you're going to look at your candlestick chart and it's going to be going nowhere. It's going to be hitting a wall. And we're going to see this number go 500, 1,200, 1,800, 2,000. The guys who've been in here for a while have seen this. We see it real time. You do not buy this guy because what it does is it causes a mini draw on liquidity. He is creating a micro draw on liquidity. So what he's doing here is, let's say he needs like 30,000 contracts. He wants to get 30,000 contracts long. Maybe he did some here, maybe he did some back here, he did a bid here. Typically on their last load, if he's got 8,000 contracts left, he'll put what's called an iceberg out here for 5,000 contracts. It's literally 5,000 contracts at the bid. And he just keeps pumping contracts into this. Starts with 500. They start getting sold into. He has another 500, 1,000, 1,000, 1,000. And then eventually what does he do? He lets everything go. He just stops propping that price. And what price does is it washes really quickly. The important thing is, after it washes out, what does price do? So if we had a big 5,000 block iceberg here, I would not be touching it through this iceberg. Dude, you play your shenanigans. I don't want to have anything to do with it. I would let this thing wash out. And what I would want to see is if this guy's actually getting long here and going to hold the market up, I'd want to see a washout, a drive back above him, then buy him. Okay? It's going to be very, very tempting, especially if you're just getting into order flow. If you see a big buyer here, your natural instinct is this guy has huge money, whoever it is, whatever it is, he knows what he's doing. I'm buying in front of him and I'm going to put my stop right below him. You're going to lose 99% of the time because 99.9% of the time you will never see an iceberg order right at the bottom of a range. There's always going to be a tail below him, which is either going to tell us that those aggressive shorts fail to accept lower, which most of the time is the case because there's so much pressure put into this guy. By the time we get through him, no one's there to push price any lower. People start buying this up. It gets back above him. He starts loading in more contracts, and then we go. So that's one thing that you're going to see on order flow. Now, to interpreting these bottom areas right here, the bottom one is just volume. Okay, this is volume per Renko print. We've got a minimum delta. So this is these are all going to be per the print, right? Like these calculations are for this whole print right here. So minimum delta on this print at what this is telling you at one point on this print right here, the delta was minus 2,361. That was the lowest the negative delta ever got. The max the delta ever was plus 24. So in this case, likely what happened was this print open, we got like 24 contracts bought, and then we just went and we just got destroyed, right? The important part is, what is the closing delta? Well, the closing delta closed very negative. And where did price go? Like you said, it went nowhere, right? This is more delta than this print, than most of these prints. And all of these prints were moving down, 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 down. This guy gets to and through a low, applies a lot of pressure on the negative delta, and he can't go anywhere. Once we start moving above this area, this gives us an indication that the market could probably reverse, right? And if the market's going to reverse and start trending, this is where I want to implement this new model. of buying these guys as we go up. If we get a very nice draw on liquidity on a higher time frame, I mean like 15, 30 minute plus, if we got a draw on liquidity here, we could wait for a model or a PD array, couple it with your order flow, and then look to get long. But that's what all of these columns at the bottom mean.
This reversal here isn't tradable for you because you didn't have a reverse back into him. Is that why you wouldn't trade this particular?
I didn't have a reverse back into any buyers, right? So if we look at, well, there's a few things that happened here. Number one, we didn't take a draw, we didn't sweep a low. So we don't have like traders offside, we haven't hit a liquidity pool. So number one for me, I just don't like it already. Number two, we push up, and if we look at, like we talked about earlier, this high right here. This is the high we're supposed to be looking at a market structure shift with large displacement. Is that a large market structure shift? No. Is this displacement? Yep, we're displacing higher, for sure, no doubt. But is this a large market structure shift? No. So all of a sudden, I've looked at three things. Did we take a draw? Did we have a market structure shift? Do we have displacement? Only one of the three things, or one out of the three pieces of my puzzle, have come together. Impossible for me to take a trade, right? Okay, we get a PD array here, as ICT calls it, a PD array. This is great. We get a PD array. Now if we draw our fib like this, just on this little drive right here, are we in premium or discount? We're still in a premium range, right? Okay, so we've looked at four things. Only one of these things has met what we want to see. Now we go into order flow. This is sort of the drive to the upside we looked at. If we wanted to buy in a discounted area, we're just going to draw a rough guesstimation of where premium and discount would be, which would, for me, is just buying for value. I want to buy as close to my stop as I can. Where would you buy? We start moving up here. Where would you buy? We've got buyers buying over buyers, buyers buying over buyers. Where's the buy? For me, I'll buy here. We're in a discounted range. We're very close to low of day, which is a good stop. And we had buyer participation off a broken low with large negative delta that could not continue to apply pressure to the downside. The market turned around, shifted up to the upside, displaced to the upside. Buyers, I would want to buy here. If I have my order set here and we never get back there, we never get back there. Right? But all in all, I probably wouldn't take this trade because the first thing that we want to see is a draw. The trade that we talked about earlier, this trade is a better trade. There's a few more people in here. Do you guys mind if we go over this trade again? Is it going to be helpful?
Yeah, no problem.
Okay, I'll take it as a yesy. Trade we talked
Yes,
about
sir.
earlier. Sorry, go ahead.
Yes, sir.
Okay. So trade we talked about earlier. We agreed that this could be a potential draw on liquidity here. We've got highs. We kind of roll over. Perfect. Anyone who's short here could have a stop above this. This wick right here happened in the pre-market. Right? We'll go down to the 1 minute chart and check this out. This wick right here happened in the pre-market. Still in the pre-market, what do? We start displacing lower. Okay, price displaces lower above the draw. We don't quite get a large market structure shift. I mean, depending on where you want to measure it from, here, down here, I'd probably measure it from down here. But what do we get? We get your ICT PD array in here. Price moves down. As we start shifting back to the upside, this is probably the trade that could have been taken, targeting where? This low. Now you missed it by 2 ticks. If you're going to hit the button to get out, you hit the button to get out. If not, she runs back on you. Look at the order flow on that again. Pre-market, we drive down, 9:30 opening bell, we start pushing up. These green lines are the fair value gap, the PD array that we marked out after that draw on liquidity. Where are we selling here based on sell pressure and leftover orders? We're selling the 263, which gets filled, and we're selling the 513, which misses a fill by 1 tick. Big deal. It happens. It is what it is. We're in one contract, and the market starts rolling over. This is like a good trade example of how we can combine the ICT charting concepts and his models and methodologies with order flow.
Can I ask those 2 points that you mentioned on that footprint? Those are big buyers stepping in, right? Weren't those large, aggressive buyers, and that's what pushed down the price, at least for a temporary amount?
This right here?
Wouldn't those be super aggressive sellers? Sorry.
Very aggressive sellers and passive buyers, right? So for every buyer, there's a seller. Like we have to transact contracts, right? We've got to, you want to buy, someone's got to sell to you. So there's someone sitting on the bid here, or multiple people sitting on the bid here saying, I want to passively buy this price because I think we're going to leg higher. And then there's sellers, aggressive sellers saying, I want to aggressively sell at the market on the bid to drive price lower. And that's why we get the negative delta. These deltas get made up by aggression, not passive participants. I mean, the colors get made up by aggression. This 476, there was someone sitting limit on the offer, trying to sell limit on the offer here, and 476 additional market participants drove into this guy on the buy side, buying the offer to try and push price up.
The big tell here, the fact that it was going to work lower for at least a short amount of time, is the fact that the candles moved with those aggressive sellers.
Totally.
And so the fact that both candles moved and finished out much lower, then when it returned to that, I guess the theory is that there's still sellers there, and then the buyers that were trapped up there are going to unfold their positions, which will drive the position down.
Yep.
And complete a short play, correct?
Yep. So let's say you bought this, right? And you bought this. You were the passive buyer here, right? You were the passive buyer. The market comes back down. We got a lot of aggression here. It moves down even further. We get a lot of aggression here. The market continues to go down. At this point, you're probably trying to find your diaper to put your diaper on. You're freaking out. You're pretty stuck. The market comes back. You all of a sudden, your P&L goes to zero from minus, I don't know, a lot of money if these are all of your contracts, right? What are you naturally going to do? I was in the wrong trade. The market didn't hold. I was in the wrong trade. Let me just kill this trade, break even. If you bought, what do you have to do? Sell. So you're selling your position along with all of the other new short sellers coming in, selling this exact same position. Naturally, with that much pressure, the market's going to want to reverse and move down.
See, and that was actually that Judas swing that I was talking to you about before, which I've been back testing. The fact that it basically, this is a sweep of the overnight session, Asian and London highs. When it swept and took out that liquidity from the overnight session, and it dropped back down, and then it came up and tested that fair value gap on a candlestick. But what's really cool is you can see where those sellers stepped in, and the fact that they're winning right now can give you confluence to the fact that you could enter there with a fairly reasonable stop. At the high is not very far away, and I actually entered that trade.
Check that out.
This one, and I missed the one that was 2 days ago, the same. But what I'm really curious, it's amazing that you can see those sellers step in and set your exact entry around that, especially if the fair value gap's a little bit bigger. It was really tight there, but
yeah, where
really
you're
awesome.
going to find a big bonus here is there was a trade that I shared in TT last week. There was a fair value gap, and it was, I don't know, maybe 3 points on ES. And it was good. It did everything. We had a draw. We shifted market structure, and we were coming back up into the fair value gap. And this was, I forget what it was, 3, 4, 5, whatever it was. It was a larger fair value gap. Whereas if you're selling the front of it, you've got to risk the 5 points of the gap, plus if you're risking over, candle 1, another 3, 4 points, you're risking like 8, 9 points. Now, Within the fair value gap, I saw nothing on the order flow, but about 4 or 5 ticks above the fair value gap, I saw the seller that continued to apply the pressure through this move. So I didn't touch this PD array. I put my order here, and we came all the way back up, and it hit my order, went 1 tick above, and we got like 22 points out of the trade.
Awesome stuff, man. Really
This
cool.
is where it makes a huge difference, right? And there's traders that say like, oh, you know, if the fair value gap is only, okay, let's say right here, we've got a high. We've got the fair value gap, and this high is, let's just say 5,000. This fair value gap right here is 4995 by 4990, 5 points, right? Now, up here at 4997, we see an order that started this. As we start coming back up into it, if you short here and you risk here, that's 10 points, right? Not only is it 10 points, let's say this is our target and this low rate here is 4970. What's your risk versus reward now? You're risking 10 points to make 20 points. 2 to 1, right? We come all the way back up to this order. We're risking 3 points to make 27 points. See how crazy that is? Like, what is that? Over 4x the RR. On the same trade, just making a minor adjustment, right? And you don't always get this lucky where you've got this order above the fair value gap. Typically, it's somewhere in between, maybe in front even. But when you get these trades, even the trades where we're in the fair value gap and you're trying to sell the front and you're risking 6 points instead of 10, this is substantial, right? You're getting 4.5 to 1, risking 6 points, as opposed to a 2 to 1 on the exact same trade.
That's why I joke with you. I'll definitely sell my PlayStation Trading View charts for this Atari chart if it gives you 5 points every trade. That's amazing. That's just amazing to be able to see it. I'm sure that's not every swing, every day deal, but the times it happens, that confluence gives you can go full position on those trades that it falls in line with that.
Exactly. And the beauty I've realized about footprints is, and this is something you've really got to look at as well, right? Oh, here's an example actually. See this 1285? This is relatively, it's a bigger negative delta compared to what we've had, right? Below a low, a bid tries to sit here and buy it. What does the market do? It always washes this, then it goes to the upside if it wants to go to the upside. So we never buy in front of this guy because you're always going to get that wash that's going to stop you out. The nice thing about order flow as well, or these footprint type charts, is if we're in a range here and we're selling, right? You notice how this selling, there was already an interaction here. So imagine if we just draw like a box here and a box here. As soon as we open here, we interact. Okay, this is likely no longer valid. We open here, we interact. This is likely no longer valid. So if we start pushing up, these have already been interacted with. We look up and to the left. Is there any other selling up here that we can possibly use to push this market down? Not really. The only other one is right here. And we come 2 ticks away from being filled. It is what it is, right? Carlos has been looking at on the footprints these lower volume areas as well on the footprints, which could be an interesting thing. I haven't dove into them too much, but I do look at low volume areas on TPOs. So really, what's the difference, right? Yeah, that's pretty much what I got for you guys. Outside of just unloading on you guys in one night, which is something I don't want to do because I think it'll confuse you more than it will help you. I want to give you guys enough that when we're posting pictures, photos, trades in the room and talking about certain things, you guys can start to follow along. That's what I really want, because when you guys can start following along, you're going to start seeing your own nuances in these charts as well. Every time I see this, and this happens, and which is an amazing thing, right? Like, people trade charts in a million different ways. People trade footprints in a million different ways. If we can all just have the same bias and direction, like Tony says in the chat, it's not like a lot of people in the chat are wanting to be short and wanting to be long. You can have your own plans and do whatever you want to do. But for the most part in this chat, we're thinking relatively the same way. We want to see this, and when we're all looking long, we're all looking long, right? There's going to be situations where things clash, but that's trading. Anything else you guys want to chat about, or do we want to kill it here? I believe I'm still recording this. Yes.
Thanks, Dave. Really appreciate it. You're doing an awesome job. As far as the recorded sessions, will those be available, or like say I can't make it one of the nights? Is there a way to access
totally,
this
man.
content?
What I'm going to do is I'm just going to take the recording raw like this. I'll stop it, and I'll actually show you guys here. I haven't done them in a while, but we'll flip over here. If you guys go to the video content channel, we've got all of these thumbnails, which are our regular public YouTube videos. And then you'll see these different types of thumbnails, just black. These are YouTube unlisted videos. So they're not available to the public. I'll upload them to YouTube, and I'll drop the link in here. So if you guys click these, it'll just bring you right to our YouTube unlisted section, and you can go nutty on them.
Perfect. Thanks, man.
Yeah, no worries. All right, guys, let's call it quits for the night. And I think I should be on the charts tomorrow. I don't expect very much, but you know, if nothing else, we can have a sweet chit chat. You guys have a great night. All right.
Thank you so much, Dave.
Thanks,
Appreciate
Dave.
it, man.
Cheers, guys.
Thanks, Dave.
See you tomorrow.